Well, here we are on Sunday night heading into a new week, and I'm suspecting that at least on Monday, things are going to be popping pretty good. We have Model Y inventory sold out in 29 states, and other evidence that shipments are pretty brisk here in the United States and maybe in Europe as well. China, I think it's clear, but we'll learn more about that on Tuesday. It's only a week from Wednesday that we'll know more about shipments totally. We'll find out about energy deployments, which might be a real beat. And then that's also the day we're going to learn what the full story is on tariffs, at least at the point of the reciprocation day. Anyway, so a week from Tuesday will be a big one, a big one. Maybe sales are doing well in the United States because of all this protesting and leftist nonsense that's been going on. Minnesota Governor Tim Walz, what a joke. Anyway, says that he was only joking. Oh, yeah, that's what I mean. He was only joking. He's a chucklehead. He is. And why did he think being a chucklehead was something you would put on your resume as important for running a state, much less being on call to be POTUS? That seems like the biggest joke of all. I can remember when I was 12 or 13, one of my neighbors called me a chucklehead. I think it was affectionate. I don't think it was necessarily because he believed I was saying idiotic things, but it's possible. He's sadly passed, so I can't ask him. Teslarati says this: a new study shows that many electric vehicles, their charging stations networks are substantially less reliable than Tesla's superchargers or even Rivian's Adventure network, while hardware problems accounted for the most common issues experienced. In a consumer report study, well, therefore, we can't really take it. I'm sorry, I don't like consumer reports. In a consumer report study shared last week, Tesla and Rivian's charging networks were found to be significantly more reliable than those of other companies, though EV owners reported a problem with about 1 out of every 5 charging stations initiated overall. Respondents said they had issues with only 4% of charging stations at Tesla superchargers, making them the most reliable, while issues with Rivian's network were reported for just 5% of sessions. Now, I'm going to guess that in 4 years, I have been at a charging station about 60 or 70 times. So theoretically, I should have had a couple of negative experiences so far. No, none. Not a single one. I mean, not even close. Comparatively, Shell recharge users face the most issues, with respondents detailing problems at 48%. How can you be that bad? How can you have such a horrible reputation and survive? The next reliable networks were EVgo and Blink, which followed with 43% and 41% problems reported, respectively. DC fast charging had reported issues 34%, while owners faced problems with level 2 chargers in 25% of sessions. This is not necessarily good news, I got to tell you, because if if people don't get over their fear of charging and their fear of, their range anxiety, then they're not going to step up to the plate. There's still a lot of people that are negative on BEVs because of this. So I've been in a lot of different businesses in my life. If I had anything like this kind of failure rate, those companies would have gone down the tubes in a minute. The findings, the study concluded that the public charging experience can vary widely, yeah, apparently, based on the vehicle and the charging networks operating in one community and along frequent trips, according to Drew Toher of the Consumer Report. Sawyer Merritt reports that Tesla's Giga Berlin factory has increased its localization of suppliers with a recent switch to the new Model Y. 92% of components come from somewhere in Europe. In the US, a new study confirmed that Teslas are the most made in USA vehicles. And of course, in China, I believe the number is also over 95%. So this is a very smart way to do business. It means that when there are tariff issues like we're dealing with right now, there's less issues compared to our competitors. This is Randy Kirk, by the way. You could hit the like and subscribe and notify button. I say that like, but I really mean it. Hit the like button if you like the channel or you like my shirt or anything, just hit the like button. It helps. Come on, take a minute, hit it. Just, even if you never hit it before. And then hitting subscribe, that's important, very important to the channel. Not just watching the channel, thank you, but it would really help if you could contribute a little bit more by hitting notify so that you'll be reminded there's another show tonight at 7:45, which is kind of going to be the part 2 of this show. And it's going to be maybe one of my best shows ever. I think it has a lot to do with what's happened this last week, kind of nutshelling it. I think you're going to like it. Anyway, and then Patreon is always you just go down to the description on that one, click on the Patreon little thing right there, little URL, link thing, and it'll take you right over there. It's super easy to sign up. Trueflation, who I used to have a lot of respect for, don't have that much respect for them anymore. However, this seemed to be smart. They did a more in-depth study than I have done so far, and they say that tariffs might add 0.8% to prices. Now, unfortunately, they said inflation. And I even heard one of the smart guys, one of the guys I respected, we'll be talking about them more tonight, from the new cabinet. I heard one of the smart guys say the other day was referring to how much inflation might be impacted by these tariff increases. Well, I understand that it's an easy or a difficult distinction to make, but it's just got to be made. We got to keep this focused to where a price increase is a price increase, and inflation is caused by low productivity or by increasing the money supply. That's the only way. If I raise my prices, if I'm sitting I have products on Amazon. Let's say tomorrow morning I decide to raise my prices on Amazon by 10%. Okay, I could do that. Take me a few minutes. I can raise all my prices by 10%. Now let's say I never raise them again. Well, that's not inflation. That is my decision because I just felt like it. I thought I could sell more if I raised the prices. Whatever reason I have, it doesn't matter. My raw materials went up. Okay, now you can get into these inflationary cycles, and you can get into a situation where there's expectations of inflation, and the Fed is worried about those as well. But even as you look at expectations and you look at consumer confidence and you look at all those kinds of things, it always is still going to come down to, are people making more widgets in the same amount of time or less widgets in the same amount of time, and or is the government printing money? Because that's the only way you can actually get more money chasing fewer products, which causes, or the same amount of products, or the same amount of money chasing fewer products in the case of less productivity. That's the only way you get inflation. No other way. Okay, anyway, Trueflation said that they thought that the tariffs might add 0.8% to the price of things this year. But for new printing, I'm sorry, and then I just explained the same thing. My number I came up to was 1.4% possible for the year if average achievable tariff. Now that means, what is achievable tariff? Okay, so we've talked about this before. Let's say that there's 14% of the economy is imports. Let's say there was a 10% average tariff on all of those imports. And let's say that nobody changed any behaviors. So we still had 14% of the same products coming in, and all of those people paid that 10% when they hit the shore, and then they went through, and I don't care whether the consumer paid for it or the wholesaler absorbed it or whether the retailer absorbed it or how it works out, but the 10%, we got the tariff at the dock, okay? Oh no, it does matter for this analysis. And let's say that all of it went through to the very end, then it would be a 1.4% price increase for the entire nation for that year, having nothing to do with the next year, unless they decided to go from 10% to 20% tariffs, and then the next year to 30% tariffs. Now, that would still actually be price increases every time, but it might start to set up an anticipation, an expectation of inflation, and it may cause behavioral differences that might be the kind of thing that we would worry about. But in general, still wouldn't matter. It wouldn't be inflation. All right, the Democrats are imploding. Did you know this? They're imploding. Their numbers are going down. The number of people that are seeing themselves as Democrats is going down. Their approval ratings are going down. But you know what else is going down? Their numbers, because of demographics. Number one, they're not having as kids as fast as conservatives are. It's very, very clear. Number two, conservatives are moving to red states, and that's increasing the number of representatives in those red states, and that's meaning that there's more chance of winning the Electoral College, as well as winning more votes in Congress. Number three, men and minorities are moving red by a lot. Men and minorities both moving red by a lot. Number four, young people are becoming more conservative. Well, old people are becoming less. They're voting more to the left or more to the blue side, but old people, well, I mean, how much longer we got? But the young people are turning way more conservative, and this is really worrying the Democrats. And number five, there's a growing middle class likely to come under Trump. The working class is now the Republican Party. And that's what he's trying to do. He's trying to build the middle class. We'll be talking more about that on the show tonight. So how come Democrats are having so few children and damning their party to extinction? Well, I've got 6 reasons. Number one, 5% of their men want to transition to become women. Number two, 10% of their men prefer other men. Number three, 50% of their men prefer video games and self-pleasure to relationships with women. It's true. 4, 20% of their men can't identify a woman. You ask them the definition, they don't know. Number 5, 10% don't want to be bringing children into a world like this. And number 6, 5% are real men, but they can't find a decent liberal woman to get married to. Anyway, so I noticed today that Bernie Sanders needs a history lesson. He's going around and talking about oligarchy. He's talking about it like it's a horrible thing. He's talking about the fact that the Republicans have all these oligarchs running the country. And he's talking about it like the liberals don't have a bunch of oligarchs paying money into their campaigns, like 3 times as much money coming into their campaigns from the oligarchs as the Republicans do. But may I give him a quick history lesson? I looked it up. I asked Grok. George Washington was the wealthiest of all of the leaders in the early republic by land and slaves. Estimated $525 million net worth if in today's money. He controlled vast estates and a great deal of political sway. Thomas Jefferson, he was a large plantation owner. I've been to his house. He had slaves also. His estimated net worth in today's money would have been about $235 billion. He had debt issues, but he was a major influence. Benjamin Franklin, self-made man, printing empire. His estimated net worth was $10 million in today's dollars. And John Hancock, he had a shipping fortune. His estimated net worth would have been $19 million. So these are just a few of the folks. I didn't ask for a complete list, but there's a few of your beginning folks in the Republic. Yeah, I'm saying it's always going to be those folks who are running countries. In fact, I can't find any examples anywhere of countries, cities, what do you call them, nation states. Doesn't matter. It's always the rich that are running things. Sheesh. And besides, these guys that are running things right now, they're absolutely amazing. All right, what's coming up this week? First of all, on Monday, we have got S&P Flash U.S. Services PMI. This is the Purchasing Managers Index. It's a survey. And then the manufacturing survey comes out as well. On the services side, the folks that are being polled expect an increase from 51 to 51.5. And on the manufacturing, they're expecting a decrease from 52.7 to 51.5. So kind of wiping each other out, only a little bit worse on the manufacturing side, although it's a much smaller part of the economy. Some of the recent numbers on manufacturing have been kind of all over the place, so not sure which way that number might go. Services going up wouldn't surprise me because it's been down a couple of months in a row. S&P on Tuesday, we've got the S&P Case-Shiller Home Price Index. So if you were hoping that prices are going to drop like a rock, you're listening to Nicholas Gibbs on Tuesday, who's telling you that prices are going down. Sorry, they're down. They're up 4.5. Last month, they were up 4.5. The folks that are estimating it for the month of February are estimating 94.4. We'll see what happens on Tuesday. On Tuesday, we get the consumer confidence number last month, 98.3. This is now, they're thinking it's going to come down even further to 95. It's been coming down steadily since the giant increase when Trump was elected. Everybody's like, oh boy, here we go. We're going to have this great economy. And now they're a little nervous, but guess what? They have nothing to be nervous about. It is going to be amazing. Just give it a minute. All right. And then finally on Tuesday morning, we get new home sales. Those were at 657,000 last month. They're estimating it'll be 679. Quite a leap on new home sales during February. You would think they would have a pretty good handle on this number. It wouldn't be that hard to, so they could be right about this, which would be shocking. Will that move the market? Will that new home sales? Well, I guess it would be baked in, but consumer confidence might knock it down because the market lately has been looking at those surveys, consumer confidence, and the other one, the consumer, which is also going to be this week. What happened to it? That's on Friday. Yeah, on Friday. We also have the consumer sentiment. Consumer sentiment comes out on Friday, and the market seems to pay attention to that right now for some reason. Okay, well, I guess because they're worried about consumers putting their hands in their pocket and not spending. I'm seeing a little bit of evidence here and there that consumers are a little nervous, but Bank of America on Friday said retail sales are up 6% year over year. And they've got the receipts for sure. On Wednesday, we have got durable goods orders. They're thinking those will be down 1% after being up last month, 3.2. You may remember if you watched the program that day, that was a surprise on the upside. So durable goods being down 1% might be just a balancing deal after having been up so much last month. Then you've got durable goods minus transportation. Last month that was flat, and this month they're not making a guess. Or they think it's going to be flat again. I don't think so. I think they're not making a guess. A couple of the St. Louis Fed president is speaking that day. Sometimes that's bad news. Okay, then on Thursday, we get initial jobless claims. You know, this is always, you know, it's like, such a nothing burger now. 223 last week. They're thinking it'll be 226 this week. GDP, the second revision, they're expecting no revision. So 2.3 stays in place. We've got the advanced U.S. trade balance in goods. They're thinking that they don't know what that's going to be. Last month, it was 153 billion. I think it was an all-time record, if I remember right, in terms of the deficit in the balance of trade. Advanced retail inventories also coming in. They have no guess on that. Last month it was down a bit. And wholesale inventories were up a little bit last month, and they're not putting in a number on that one either. But those are, as you know, the numbers I don't care that much about. Pending home sales, last month down 4.6, expecting pending home sales to be up 1%. So if pending home sales are up, prices are up, you know, I've been saying all along, this is not going to be a bad year for homes. I don't see it being a bad year for homes. All right, Friday, we get, of course, personal, the PCE. All right, so income last month was up 0.9%. It was a crazy number, but I think it's going to be up another 0.4% in income. Personal spending last month was down 0.2%. The combination would say that people were just slamming money into savings. The personal spending this month, they're thinking it'll be up 0.6, which would be more in line. And that would be good. If we have 0.6% increase in spending, that'd be in line with what Bank of America said. Then you get the, I'm sorry, the headline number. They think that will be even with last month at 0.3% higher. Then you get the year over year. They think that's going to be at 2.5, the same as last month. Both of those numbers, if they're the same as they were last month, probably won't change people's minds much on the market. But then you come to the most important number of the month. As far as the Fed is concerned, I'm so sorry. The most important number of the month is core PCE. And core PCE, they think, is going to be the same on the month over month at 0.3 on that one as well. But up slightly, up from 2.6 to 2.7 on the year over year. And that could cause a little bit of angst on a Friday afternoon. Well, we'll know about Friday morning. On a Friday, when that comes out. Consumer sentiment, interesting. The people that are scoring this and being asked what they think is going to happen on consumer confidence, they thought consumer confidence would drop, and on consumer sentiment, they think it'll be the same. I mean, that makes zero sense. All right, this just came in. Cell phone data. Cell phone data indicates that the huge crowds that AOC and Bernie have been getting over the last 3 days at these different venues were diehards that are going from event to event. Bernie, they're not just random folks that happen to be showing up. These are people from various organizations and whatnot. They're identifiable by their ping on their phone, and the vast majority are people that are, yeah, they may not be paid or they might be paid, but I mean, the vast majority are not just happening to, oh, that'd be a great idea. Let's go over and see Bernie. And no, it's regulars. Also, this afternoon, after those 3 events, Bernie was at a sit-down interview. And at the end of the interview, he was asked if he would like to see AOC in the Senate, because people are talking about her running for New York Senate. And he bolted the interview. He got up to leave. And the interviewer's like, wait, I got one more question for you. I just wanted to, and he's like, I'm not touching that with a 10-foot pole. Anyway, it was pretty weird. I guess we'll hear more about that tomorrow. It was very, very bizarre. Okay, let's take a look at what's happening with bonds right now. How are people looking at the weekend for bonds? Up again, only 1.3 basis points, but back to 4.265 in the pre-market. That does not make me happy. We have got the 2-month is up also 0.3 of a basis point, and the 2-year up 0.6 of a basis point. So everything up a bit. Maybe that'll fold again in the morning, but maybe they're anticipating the PCE already at the end of the week. Maybe it's other reasons, but there you go. That's what it is, what it is, and it ain't good. But the rest of the news might be better. Let's take a look. We've got oil up a nickel, so that's not worth talking about. $68.33. We've also got the Brent up about $4 above that. So maybe all this stuff going on with the Houthis is causing that. Maybe it's because of the Iran sanctions. OPEC also say they're going to probably pull back on production. We'll see if they can outrun President Trump getting his oil friends to make lots and lots more oil in the United States. Natural gas down 2.26, back under $4 at $3.89. That's good news. We've got not to the oil makers, but to the natural gas people, but everybody else. Gold is higher at $9.30 at 30.30. Not to all-time high on that. Silver up also 0.4 at 33.62. Also recently was at 34 and change, like a half. Copper still sitting at 5.12, up 0.18% right now. The dollar is higher, and Bitcoin higher, 85,776, up 1567 so far for the day. And here we go with the equities. So we don't have the information for Tesla yet for tomorrow, but if the general equity situation is any indication, Tesla might be looking good later when we get that around 5 o'clock on Robinhood. So we've got $163 up for the Dow. Did I say dollars? I do that sometimes. 163 points up on the Dow. It's up 0.39%. S&P up 25.50 points. That's up 0.45%. And the NASDAQ up 106 or 0.53%. So there you go. Some evidence of maybe the stock market will continue its rally. I mean, we finished on highs on the weekend. Tesla was higher in the after hours on Friday. So it's looking pretty cool for the weekend. All right. So yesterday night and this morning, Brian Wang, of course, everything that Brian brings you is valuable, useful for understanding Tesla, understanding, sometimes it's a science deal. Anyway, these are both great videos. And I want to I'll put both of those up there so you can go back and check them out if you haven't already taken a look. And then, as mentioned, I'll have another video tonight, maybe one of the top videos ever. I'm going to be talking about, okay, I have listened to, I don't know, what would it be, 15 hours maybe of interviews and podcasts, speeches, etc. over the last week, because all of these cabinet members, vice president, all these different people coming out, phenomenal, phenomenal, phenomenal. And I'm going to have kind of an overview of what I heard last week and how that impacts, all of our trading, the economy, etc. I think you're going to like it. I think it's valuable. I think it'll be useful. So join me back here at 7:45 for that particular show. All right, that's all I got for you right now then, and it's been great talking to you. I'm never going to be able to close this.